Hello everyone. Today we're going to talk about the UK High Court ruling, the Bank of England meeting, and US factory orders. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American opening market comment. Now first off, since this is the North American comment, let me congratulate the Cubs on winning the World Series. Yay! I'm from northeastern Ohio, so I suppose I should be rooting for the Indians, but after 108 years, I think it's the Cubs' turn. Congratulations. Speaking of major upsets, the UK High Court ruled against the government today on Brexit. It said that Parliament had to have a chance to vote on the Article 50 declaration. The UK Supreme Court will hear the case again in early December. Assuming that they agree, then it's likely that there will be a general election sometime in the spring of next year before a new Parliament votes on the issue. Now, it's unlikely that Parliament would vote to block Brexit entirely. Instead, they'll probably use their leverage to ensure that Britain stays inside the single market, one way or the other. In other words, a soft Brexit, which tends to be better for the pound. In any case, assuming the Supreme Court upholds the decision, it means Article 50 won't be triggered by next March as planned. That means more months of uncertainty, but at the same time, more time within the EU, and therefore less disruption to the UK economy. That too should be good for the pound. Now, the Bank of England seemed to agree with this, and they came in line with a more hawkish than expected policy. They unanimously agreed to keep rates unchanged, but that wasn't the main thing at all. Whereas before they had said they expected to cut rates again, now they say rates could go either way. They raised their 2017 forecast for inflation to way over target, 2.7% versus the 2% target, and said there's a limit to how much of an overshoot they'll tolerate. So this is very positive for the pound as well. The weekly commitment of traders report shows that investors are still holding nearly record short positions in the pound. We could see further short covering push the pound back up. As for today's data, U.S. factory orders are the main economic indicator coming out in the U.S. today. Given the tiny minus 0.1% month-on-month fall in durable goods orders during the month, it seems likely that factory orders will also be only slightly changed. The forecast is for a meager 0.2% month-on-month rise, which seems reasonable. Now, such weak growth could prove negative for the dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.